Once again, this is a tutorial brought to you by MS Access in cooperation with iSystem and YouTube. Now, most system will provide you let's say a payroll program. It will provide you the necessary payroll reports, but it will not provide you the accounting system, the accounting entries rather, that should be generated from the payroll that should be brought to your GL system. Why is that? Probably you're using a different payroll program and a different GL system. Nonetheless, if you have both payroll program and GL system made by one person, probably it will not create an automatic generation of accounting entries, much less that it may not be through MS Access. So this is our topic. Okay, we begin with the payroll file, which the entries will come, and it will be the payroll file will create billing entries, and it will be sent to the GL, the general ledger, or the GL service income. The idea is there is no manual inputting of transactions. No manual inputting of transactions, meaning it should be automatic. Now, why will it bother you that there's no manual inputting of transactions? Because you don't want to re-encode the same figure over and over again. This poses not only delay, but also probably will give you an error. So that's the reason. So again, this is brought to you by iSystem. And please look at the addresses below if you want to check out more of our training program, and our YouTube video is the address is also below. Okay, the payroll worksheet, we go there to as we are preparing this, there will be two systems in that should be displayed. One is the GL system and one is the payroll system. When you're doing this automatic generation of entries, you should be uploading two systems at the same time, the payroll system and the GL system. So for now, let's talk about that worksheet. Okay, the worksheet, yes, it is where you define, this is where you define which field will those entries come from. Now this is that file, the payroll worksheet. If you go to design view, okay, you go to design view, and of the payroll worksheet, you go to this file. These are the available files. You have OTH4, OT4, and OTH5, OTD5, and OT5. Now what are these? These are available fields from the payroll program. Now what do you mean by available? It means it is not in use. It is a temporary available field that we can use. Now why is it necessary to use an available field? Why not just create a new field to define the billing entries? Because, well, for one, it takes time, and second, those are already built in it is already coded in the program, So if you try to adjust, add, modify, and delete some of the fields in place of a new one, it can probably create some errors. So to avoid that, because we don't want that, we want the installation fast. So we make use of these temporary fields where we define the billing fields. Okay, so again, we're talking about OTH4, okay, where we will not be detailing much on this definition, but just briefly, these are the definition coming from the billings here. Okay, now if you notice the entries here, you have this figure, which is supposed to be the total billing for the period, and you have entries here like total to guards and government non-VAT. You have agency fee here, and you have value added tax. Okay, now what are these? Okay, these are the entries that has to be automatically generated from from our payroll file, should be brought to the GL file. So these are those files. Those are those entries. These entries. You have one here. Let's go back. So you have 1, 2, 3, and 4. 68040, 6804, 816, and 75660. That should be your entries. Your entries should be debit, AR, credit, salaries, payable, credit, agency fee, and credit output tax. We will go in the particulars later on, but for now, briefly, that's what we are doing here. Those entries coming from the payroll file, those billing entries should be transferred to the GL. How will that happen? Okay, so we've talked about defining these fields. So the definition here of these fields, if you go to this definition, okay, if you look at the definitions here by the design view, you'll have an idea of what we're talking about here. Now this is the definition of that accounts receivable, debit, AR. Okay, now if you notice here, this is your AR should be the billing rate times the number of present employees. If you still recall the other training program, the present employees is defined by the FR, which is the from date. So if the FR is blank, then it will not be counted, and if it's not counted, you will not get a 1 count. So if you have 10 of these, for instance, so 10 will be multiplied to this billing rate. So please go to the other tutorial on MS Access pertaining to generating the billing. Please refer to that training program. But for now,